minutes. We're going to whip through this. Forward-looking statement, cautionary statement. So who are we? Well, we have three main assets. We've got an operating mine in Eritrea. It's a copper zinc mine. We've got the Timok copper gold project in Serbia, and we've got a bunch of cash. So we're financially focused. We're very financially focused. Bisha has generated about $1 billion in operating cash flow in the last 6 years. Bisha paid back our investment to build this mine, initial build, in 11 months in 2011. And we've built up cash since. We've paid back to our shareholders over $170 million in dividends, which is more than what we needed our share to build the Bisha mine initially. It's more than what we even raised from our shareholders to originally build the Bisha mine. So that cash flow out of Bisha has allowed Nevsun to do the Timok transaction, which is the Serbian asset, and still have a couple $100 million left over. We deliver. We have built Bisha on time and on budget, both the initial stage and 2 expansion phases. We completed the reservoir transaction. And in this past year, we just announced that we achieved our zinc production guidance and our gold sales guidance, as well as copper guidance for the first half of the year. We have a very significant growth profile, both in Eritrea and Serbia in production. So we're very good managers. We understand what we're doing. We've got the experience, the depth. Now I want to just talk very briefly about the Timok project. Serbia, very good country, tremendous infrastructure, very, very strong support from the state. Meeting with the Prime Minister and Minister of Mines made it very, very clear they want this mine to proceed. No permitting problems anticipated. Good power, water access. There's smelters nearby. There's a smelter within a few kilometers of the site. It's a mining community, trained, good engineering, good population attitude towards building a mine. The project itself is really 2 zones. There's an upper zone, which is what I'm really going to talk about mainly, and there's also a lower zone. That lower zone is something that we haven't talked about a great deal, but we're going to be spending money on it because, quite frankly, it's what all the big companies like the Rios, the Freeports, the BHPs are very interested in. That's a little way out. It's actually it's too big for us, quite frankly. Multi-billion-dollar project. This has got about a 12-year mine life, the upper zone. Grade. Bisha was about grade. Timok is about grade. Overall average, and this is using resources done by Reservoir, the predecessor owner of the project. In the sort of the scope or expectation of around 3% copper plus a healthy gold component of almost 2 grams gold. I'm going to get into some specific results in just a sec. Reservoir, this is at a PEA stage, came up with US $1.5 billion value on it. So their NPV was in that range. What it's our job to do is move this forward to get to a pre-feasibility. We're going to deliver a pre-feasibility in September of this year. And at that time, naturally with a pre-feas, you're going to deliver reserves. You're going to deliver a method about how we are going to mine it and the kind of value that's going to be attributable to it. We are drilling like crazy. We're going to do about 50,000 meters of drilling this year. Overall, between the lower zone and the upper zone, we're going to spend about $60 million in drilling and including the delivery of that pre-feas. And we would hope to actually start the decline towards the end of this year in Q4. On the upper zone alone, we're going to spend about $35 million. So just to give you some sense of recent drill results, hopefully you can read from even the back of the room. When I talk about grade, this is very, very serious grade. We released these in December, about 180 meters of over 4% copper with almost 5 grams gold, and close to 100 meters of close to 10% copper with about 9 grams gold. When you look at either the copper or the gold. You look at the copper and you figure that's going to be a copper mine. You look at the gold that's there, oh, that's going to be a gold mine. This is in one deposit. It's got both. We would expect to generate enormous cash flow, much higher than even Bisha did. So let's just talk about Bisha. That's a picture of where it is, a fairly recent picture, the pit. Eritrea, it's a part of the world that not many people understand. Certainly not many people in this room would have been there. We've been there 19 years, a little over 19 years now. We've had the staying power to discover it, to move it all the way through to production. We were the first modern day mine that went into Eritrea. The country's quite young. It's a very stable country. Its government is a partner of ours. They actually own part of Bisha. They own 40%, of which they purchased 30%. And as a shareholder in that subsidiary company, they had to contribute their share of capital. So they have skin in the game. They're a state that absolutely is very supportive of mining. And we have been a big, big benefit to the people of Eritrea and certainly the country. Just to give you some sense of what's left in Bisha, and I'm just talking about the main deposit, Bisha mine. I'll talk a bit about expansion capability in a sec. It's about half and half zinc and copper. It was originally a gold mine. We hit the gold price pretty well. Our margin was about $1,300 an ounce. Then we morphed into copper when copper took off, and it looks like our timing, and this is pure luck, but our timing on zinc is very, very good. So we'll produce over the next, so the life of mine right now is about 8 years. We'll produce in the order of a couple 100 million pounds of zinc. This is payable metal. Zinc per year, and maybe in the order of 40 to 50 million pounds of copper with gold and silver credits. Good time to be doing it. The interesting story about Bisha is how we have expanded it. The map up there is actually so our licensed area is about 20 times bigger than what it was 6 months ago. So we expanded our area significantly, and what we're going to be doing very soon is doing an airborne survey for geophysics, and what we would expect to find is a lot more targets. The point of this story is there's a huge amount of upside in Bisha. We consider it to be a VMS district. It could be comparable to the Noranda district or the Flin Flon district. Could go on for decades. And all I've talked about before was that one juicy deposit called the Bisha mine up in the front, up in the top right there. We've already found, I think there's now 6 deposits on the properties. So corporately, where are we? We're about, as Joe mentioned, we may be bigger than some of the other companies here, but it's grown. It's about 1.3 billion right now in that order of magnitude. We've got very good analyst coverage. The average target is towards $6 Canadian per share. We've got very, very strong shareholder support, largely institutional, about 70% institutional, anchored by 30% of that is BlackRock and Vanguard. Vanguard managed by M&G, both UK-based, really. So very, very strong support. Just moving on, in terms of who we have running the company, I'm the CEO. The board has just gone through a further beefing up of the board, I'd say. Just announced the addition of 2 new directors, Ian Pierce. Ian is an ex-Fluor engineer for most of his career, then morphed into running a nickel company, Xstrata. Well, he took over Falconbridge, I guess it was, and then Xstrata Nickel, then became part of X2 out of London, Mick Davis's, no relation, Mick Davis's firm. We also added Dave Smith. Dave is ex-Plastodome for a chunk of his career, then Ballard, then also Finning. So deep international experience. Very, very strong management team. We're the guys that brought this along. So with that, I'm going to turn it back to Joe.